All right. Hello, everyone. Good evening. Welcome to our webinar session today. And I am Sanya. I am MLRO, Money Laundering Reporting Officer for Alliance Insurance in United Arab Emirates, Dubai. And over the past few years, based on my experience, I have seen significant changes, significant updates with reference to the regulatory risk, with reference to regulatory updates, and especially regulatory changes in terms of financial crime compliance in UAE and in MENAT, to be precise. So here today, we are going to discuss about the recent changes that has happened in UAE. And I wish to make my audience aware about the initiatives that UAE has taken so far and the reasons why there have been significant changes, our response to it, and how financial sector in UAE is actually responding to such changes. It's quite interesting. I hope, wish, and believe that we have key takeaways and we take away relevant updates and the reasoning in terms of AML and CFT changes and our initiatives. So I'll quickly start sharing my screen to begin with. All right. So to begin with, the topic of today's session is UAE's outlook on compliance and regulatory risk affairs and changing landscape, AML, CFT, and TFS. I'll begin with my agenda for today, which is Introduction to Regulatory Compliance and Financial Crimes, Financial Action Task Force, which is FATF. Next, going to be Grey Listing UAE, quite interesting topic, onshore financial regulators, and UAE's initiatives in terms of MLCFTC, TFS, EOCN, NRA, and fines. Quite a lot of abbreviations, but I believe that when we reach the end of the session, we will have clarity on all the abbreviations and we will have the full forms with us as well. So yeah, going to the next one. Introduction to regulatory compliance and financial crimes. So regulatory compliance, sorry, just a second. All right, regulatory compliance. So what is regulatory compliance? Generally we know that it is adherence to laws and regulations. Definitely, it's not restricted to a specific industry, or we can say it is only for the financial institutions, not that way. But regulatory compliance is required in every industry, every sector, because based on any changes, if there are any non-compliance, there could be consequences. There could be examples which I would say could be Occupational Safety and Health Administration, which is OSHA for Safety Working Environment for Employees. And also it could be Equal Employment Opportunity Commission for a fairer and equal wage in the institution, you know. So there are differences when it comes to regulatory compliance in terms of corporate compliance. So corporate compliance is always going to be something which is internal policy and rules and procedures. Could be sensitive data and cybersecurity. Cybersecurity has become a major concern since COVID-19 has hit the financial sectors. And in terms of corporate compliance, all the internal policies and rule and guidelines, those are the concern. But when it comes to regulatory compliance, definitely we have to abide by or comply by the regulations and the legislations. Especially if it's financial industry, there would be penalties, there would be penalized for a number of reasons, while both ensure integrity and safety and ethics, like we all know. It's not a new thing, but definitely we have to be aware about what exactly the changes are happening around us. Why is it significantly important? Historically, if you look into it, over the last 100 years, volumes of regulations and guidelines has increased dramatically. There have been huge changes. And that's the reason business always needs to develop that ability to respond to these changes, you know. So when we say that there are constantly regulatory changes, it's more about how much we are able to respond to such changes. For example, if there are regulatory changes, there are updates. It's not only about okay, we have to comply, but it's more of the changes that business is able to show, business is able to possess at every point in time, because generally we come across a lot of employees who are opposed to changes, especially today's generation. We are more attracted to changes because we want to change things. It's the age of innovation and we want to introduce changes. But if you look into like a few years ago, it's very difficult for the stakeholders to adapt to changes, and that's a very huge threat when it comes to regulatory risk and regulatory concerns. Damaged reputation, financial penalties. I think reputational risk is also one of the major concern in this case, because once the institution is under the radar that, oh, okay, there are regulatory checks that's happening and the change based on the changes, okay, the institution is not complying, we are we automatically come into that radar where we are facing financial penalties, and once that penalties happen to the companies, happens to the institution, there are business partners who are not willing to work with us. There are customers who are willing to come and, have the relationship with us. So I think that's the reason regulatory compliance is quite important. I also want to include the how to implement or implement an effective regulatory compliance plan. Definitely, it's just a second. Yeah. So just to make it a short description here, conduct a compliance audit. Definitely only if there is an audit, we can find out the gaps. And only if we find out the gaps, we can find out, introduce changes and streamline the procedures, So for example, if we streamline the procedures also, it has to be implemented in a manner that business is satisfied, and regulatory compliance also is going in an equal balance. There are no imbalances in both the perspectives. Compliance officer, designation of compliance officer, very important. Establish and maintain your policy procedures. Now, when it comes to policy procedures, I believe only when the policy procedures are updated, it can be implemented, because based on the audit also, like I mentioned, when we find a gap, to fill them, we update our policy procedures. Especially now, what we mostly see around is we have less habitual reading, and because of that, because of lack of regular reading habit, sometimes employees are not really reading through the policy and procedures. But that's where compliance actually have to play a major role, because every policy procedures have to be updated at least annually, and to the extent that the employees are aware about what's actually happening in the institution, and what is guiding the company, what is the foundation on which it is being guided. And that's the reason updating the policy procedures is central to a compliance officer's role, so that we ensure that whatever the regulations have been issued and the policies are in line with it. At the same time, we have to make sure that employees are following it without any fail. Then comes the compliance training. Definitely training. Training has to happen, because employees must be aware of their role and their the steps that they're supposed to follow. So within the scope of their role, especially when it comes to regulatory, generally what I have seen is everyone just say that, oh, this is a compliance role, let the compliance handle it. But that's not true. All the employees, let it be first line of defense, second line of defense, third line of defense, all the employees, they have specific responsibilities within the scope of their role. And within their role, every responsibilities must be fulfilled, and this is what is tested during compliance audit. Numerous laws, regulations apply depending on the jurisdiction and industry. So understanding applicable sectoral regulatory requirements are necessary, because although we just mentioned that, okay, this is how an effective regulatory compliance plan looks like, but it's not just about the plan. It's a general outline which is laid out. But laws and regulations, it's very depending on the jurisdiction and industry. And that's what I want to actually explain in today's session, about how UAE has been facing it and what is the role. Just a short description about financial crime compliance. Strategies, tactics deployed by organizations to prevent, detect, and report illegal financial activities. It also includes actively trying to gain from criminal activities financially and actions trying to hide the proceeds of crime. So all the proceeds that arises out of criminal acts, illegal activity, mostly the launderers, they try to hide the proceeds of the crime, or sometimes the proceeds could be from terrorist activities, or sometimes it could be proliferation, which means the nuclear weapon, So these three are the main topic for today, because financial crime compliance include fraud, cybercrime, money laundering, terrorist financing, proliferation financing, and bribery and corruption. But the recent changes in UAE has affected money laundering, terrorist financing, and proliferation financing. And this is where UAE is currently focusing on. And just to give you a quick overview of all of them, there are designated individuals under terrorist financing. There are false bank details are always found further to the review that is done by the banks. There are these individuals are always found. When it comes to proliferation financing, tied to a country of concern, meaning relationship with the country which is into, or a jurisdiction which is sanctioned. Also, dual use items, hidden beneficial owner. Now, when we say beneficial owner, it could be anybody who owns the entity more than 25% of share. Now, it could be an individual or an entity. Now, if it's an entity, we go further, drill down deep to find out who is actually owning that specific entity more than 25%. So, and the reason why we find out the UBO, which is ultimate beneficial owner, is because we can, to ensure that, okay, that person is not involved in any of the terrorist financing, money laundering, proliferation financing. So this is the purpose of finding out hidden beneficial owner. Sometimes the launderer actually tries to build up a series of companies. For example, if he has a company, he tries to show it on the legal papers that he owns a specific company with the name of the company and not his own identity. You understand? So that's how he can hide his own identity. Use of front companies. Definitely, there would be front companies who are actually representing a series of companies at the back, but the companies would be actually registered in UAE. But the main operations are performed in Iran or Syria or any other higher jurisdictions where we are not supposed to transact or bank with. This is an overview of all the three. Coming back to the regulators. So as I was mentioning, I would like to introduce FATF here, which is Financial Action Task Force. So under FATF, it is an international standards on combating money laundering and financing of terrorism and proliferation. So when I say FATF, there are one of the main thing that we need to always remember is it is a global money laundering and terrorist financing watchdog. So basically they are intergovernmental body who sets the international standards, all right, to prevent the certain jurisdiction from illegal activities which harm the society, of course. So basically, to protect the financial institution or financial system of several countries, there are few member countries that have come together, and that's what it forms as FATF. FATF works to identify national level vulnerabilities with the aim of protecting the international financial system from misuse. As a policy-making body, FATF works to generate the necessary political will to bring about national legislative and regulatory reforms in those areas. And it collaborates with this, like I mentioned, it collaborates with its member states and regional organizations to develop a legal, regulatory, and operational framework. So basically, they provide a framework for the jurisdiction to work on it, and then they conduct an examination to find out if we have really complied by anti-money laundering framework, proliferation financing framework, and terrorist financing framework. I would like to also mention about the lists that FATF has. So FATF has the list, I mean, they have two kinds of list, which is one is blacklist and another one is gray list. So there are certain jurisdictions that are fixed under blacklist and another one's under gray list. Under blacklist, there are high jurisdictions subject to a call for action. So basically, they encourage countries to improve their regulatory regimes and establish a global set of AML CFT standards. Blacklisted countries will likely be subject to economic sanctions and other prohibitive measures by FATF member states. In case if they are consistently not working out for a better performance by FATF, they will be moved to economic sanctions at a later stage or any other prohibitive measures by FATF. Whereas gray list is the countries that have committed to address strategic deficiencies in their AML and CTF regimes. Given the potential risk, regulatory risk associated with countries that do not maintain international compliance standards, financial institutions should be aware of FATF blacklist and gray list countries and what that designation entails. Want to give a quick brief on gray listing because this is the major point for today's webinar. Basically, under gray listing, like I mentioned before, the jurisdictions are placed under increased monitoring. So there is a set period of time when FATF actually gives that time to the jurisdiction to have to create framework and with a commitment to resolve any identified strategic deficiencies. All right. Now, if the country is not successful in providing a better framework and implementation I wouldn't say implementation plan, but it also includes the action. So FATF would like to see the action as well. Now, if the country is or the jurisdiction is unsuccessful to deliver this, they are categorized under gray list. FATF and FATF style regional bodies continue to work with the jurisdiction as they report on the progress achieved in addressing their strategic deficiencies. FATF calls on these jurisdictions to complete their action plan within the agreed time frame and welcomes their commitment and closely monitor their progress. FATF does not call for the application of EDD measures, which is enhanced due diligence measures, to be applied. It do not envisage risking or cutting off entire classes of customers, but call for the application of a risk-based approach. Now, this is where UAE was found to be having some strategic deficiencies. UAE was found to have strategic deficiencies, and that's why UAE was listed under gray list. This is an excerpt from one of the report by Deloitte. If anybody is interested to have this, I can definitely share it. You may share your contact on the chat box, and I will share the source because it's quite interesting. Because here we have I'm trying to explain is about the historical records of UAE. So since April 2008, UAE had a mutual evaluation report which went to FATF. And upon that, there were consistently checks and examination held. However, in April 2020, UAE had another mutual evaluation report submitted to FATF. However, in 2021 February, establishment of an executive office to combat money laundering and terrorist financing. In light of what the evaluation report submitted in April 2020, in 2021 February, UAE actually formed an executive office, to combat money laundering and terrorist financing. They had that committee, and we had strict measures actually working up. However, in November 2021, FATF actually conducts an on-site visit. FATF comes for an on-site visit. They conduct that visit for different jurisdictions. They see if we are complying or we have implemented the action plan which we actually submitted to them. If the program is successful, if we have done enough work, definitely it is recognized. But if not, we will be, or I would say the specific jurisdiction will be placed under increased monitoring for a period of time. And that increased monitoring is called the gray listing period. So that's the reason in November 2021, enhanced follow-up report for UAE was requested by FATF, and upon which recently in March 2022, UAE was added to FATF gray list. And this is the reason why UAE has adopted massive regulations. There has been couple of multiple regulations which has been issued, guidelines which has been issued to financial sector, DNFBPs, which is designated non-financial businesses and professions, and all the sectors are currently working together to be successful to be successful in implementing these action plans that are submitted to FATF, so that during the next year time, FATF is able to find UAE at a position where we are successful in fighting against money laundering, terrorist financing, and proliferation financing. This is a quick look on grey list and blacklist. Definitely, I'm sure that all of us would have questions. Okay, what kind of countries are under grey list and blacklist? As of now, under blacklist, it's Iran, Myanmar, and North Korea. Under grey list, you can see towards the down after South Sudan, Syria, Tanzania, Turkey, UAE, Uganda, and Yemen. So UAE is one of the country along with the others. Here is where I want to introduce about the onshore financial regulators. First one is Central Bank of UAE, that regulates banks, finance companies, payment service providers, and insurance companies. And then comes ESCA, Emirates Securities and Commodities Authorities, that regulates markets, listed companies, and securities brokers. However, in today's session, I want to focus on the initiatives by UAE Central Bank, because it's a wide topic. If I want to explain about ESCA, I would actually need more time. However, we'll keep it for some other time. Also, regarding onshore financial regulators, like I said, there is Central Bank and ESCA regulate and supervise on a UAE federal level, all banks, insurers, insurance brokers. Also, at this point, I would also like to explain about the exchange companies. These exchange companies have been introduced in the market under increased monitoring by all the regulators. The reason being that's where the highest level of AML CTF risk has been found. And that's the reason cryptos and other exchange companies have become a major concern. Cryptos are also part of this, but I would again stick on to the topic so that because of the lack of time. Here is where the initiatives by UAE comes in. The abbreviations that I mentioned earlier, NAML-CFTC, TFS, EOCN, NRA, and supervisory audits and examination and penalties and fines. So again, to start with, I would say NAML-CFTC. So basically, this is a committee formed by the Central Bank, I would say, but it has on other member authorities as well. NAML-CFTC is the primary body for policy making and issuing regulations related to efforts to combat money laundering and terrorist financing in the UAE. Their responsibilities include preparing and developing a national strategy to combat crime, proposing related regulations, and monitoring their implementation. I think this last one is the main part where a lot of effort must be put, because monitoring the implementation is a major concern, because identifying gaps is okay. And regulators actually advise all the sectors to tell them, okay, this is what you lack in and you need to work on this. And then there are another examination that's held, and financial institutions have to make sure that they implement whatever the action plan they have delivered to the central bank. So monitoring is one of the major point, and NAML-CFTC work hard on this one. Subcommittee structure, just few structure, which is, technical compliance, mutual evaluation report, money laundering crimes, investigative authorities, supervisory authority, national risk assessment. So these committees are actually handling different functions under NAML-CFTC. Some of them are working on money laundering, some of them are supervisory authority. Supervisory authority means they conduct audit. Actually, they conduct on-site audit. They come down to the LFIs or licensed financial institution, and they ask for the files and the documents as part of examination. Combating of financing of terrorism, these guys actually, they issue the regulations and they conduct virtual sessions with all the financial institution and financial sectors. I've also included authority members just to have an idea about how UAE is working, because you can see almost all the ministry, all the authorities have come together under this committee. So what happens is, if any of the individual is found to be a launderer automatically it is found under, it becomes a common message among all of these authorities. So if one of them find a launderer or a person who is actually involved in terrorist financing, actively transacting and surviving in the financial market in UAE, it will be found. And for this, they have come up with something called FORI-TIC. It is a smart system developed by the federal authority, and it is under supervision and management of the sub-technical committee. All right. So Federal Authority for Nuclear Regulation, they have come up with this smart system idea. So what happens is, it's a FORI-TIC, it's a platform where all the blacklist, or I would say all the individuals who are blacklisted, are referred into this platform. So the moment one person is sanctioned, the moment one person is blacklisted, they are included under this TIC, and all other authorities are notified of the same. So in this way, they are having that coordination among themselves, so that we can keep such individuals and such entities, and not just individuals, but actually such entities also are part of this, individuals and entities out of the financial system of the country. So for that purpose, this unified system integrates and aggregates various AML and CFT cases across federal and local authorities, facilitates communication among all relevant authorities that I showed you before, allowing necessary actions and decisions for the relevant case to be implemented in a very short time frame. So this makes it quicker, after you find some person is blacklisted, it makes it quicker among all the authorities to actually spread it across in the country. Next is TFS, Targeted Financial Sanctions, sanctions against specific individuals, entities, groups, or undertaking. Purpose is to deny certain individuals, groups, organizations, and entities, means to support terrorism or finance the proliferation of weapons of mass destruction, to ensure no funds, financial assets, or economic resources of any kind, as long as they remain subject to the sanctions measures. It's just an idea of how it works. So TFS is categorized under two, which is UNSC and export control of dual-use goods. So national leader in the UAE to ensure the implementation of TFS imposed by the UAE, UN, and FATF standards. So that's what the committee, which I showed you before, they have issued TFS. It's a procedure. I wouldn't say it's a procedure, but it's a policy which doesn't allow the financial institution to work with the individual or entities who are listed under World Check, or who are listed under a specific blacklisted, which is a global blacklist that's shared across. All right. So there are certain individuals and certain entities, or it could be certain vessels sometimes when it comes to marine insurance policies or other trade-based finance. There are vessels which should not be used. So these details are provided by central bank, and financial institutions, what they need to do is they need to make sure that we do not maintain any relationship with the entities or individuals or any listed person listed under UNSC, which is UNSC Resolutions Implementation and Export Control of Dual Use. So these lists are given to the financial institution, and we make sure that none of the individual, none of the entity, none of the people, none of the vessels are actually part of our respective financial institution. To give you better clarity, this will give you a better clarity actually, because under TF, you can see these are the lists: ISIS and Al-Qaeda, Taliban. So these lists, UAE local terrorist list. So these lists are provided by the regulator, all right? And under proliferation financing, you can see Democrats, people. So these, North Korea and Iran, always sanctioned because we cannot have any transaction going on with such countries. Other UN sanctions regime includes the list of countries as is mentioned: Somalia, Iraq, Libya, Central African Republic, Yemen. So the number that you see, which is UNSCR 1844, UNSCR 1483, these are the name of the list that's available. All right. So these lists are actually adopted by the financial institution to check and have a constant checking that individuals or any listed person under these lists should not be there in our respective database. International sanction regime would include OFAC, EU, HMT, etc. These are global regulators, and global regulators also have their regulatory list, which is provided and updated. So based on the cases that are reviewed on daily basis, these lists are constantly updated also. For example, if we find any other new person or new entity as of laundering concerns or terrorist concern, those are also added onto these. So these lists are updated constantly, and it is notified to the financial institution. Like I mentioned, customer and transactions are constantly screened. So this is what the financial institutions are following. Currently, the exchange houses and other DNFBPs, which is designated non-financial business and profession, they also follow this screening, which is a major concern in regulatory compliance as of today, because we need to find out if it is a confirmed match, potential match, or false positive. False positive means, okay, there are no match. It could be a potential match, but we understand that these two are different individuals. These two are different groups. There are no match. My customer is not at all the individual or the entity listed under any of these lists. So hence, it's a false positive. But potential match could be, there is a possibility that this customer of mine. So these testing must be done before we actually have the relationship, start onboarding the customer, or the start of the relationship with the customer. So in case on a potential match stage would be, okay, my customer and this watch list, okay, there is this possibility of some match among these two, and so it could be a potential able to. All right. So we make sure that their funds, or we are not making any funds available to the listed or the sanctioned or blacklisted individual or entity. At the same time, there is no amount should actually be paid to them or received from them. This is applicable to both I would say all the financial institutions, because that's the crucial part where we allow such dirty money to enter into our financial system. And this is why freezing and prohibition of funds are the final stage of TFS introduced by UAE. So next one, this is quite interesting. This is Executive Office for Control and Non-Proliferation. Executive Office for Control and Non-Proliferation, in cooperation with the Ministry of Foreign Affairs and International Cooperation and other government agencies. So they, in cooperation with ministry and the government agencies, they coordinate and supervise the application of TFS, implementation of Security Council resolution. Security Council resolution could be the list that I showed you before, UNSC list. So managing of those lists and making sure that those individuals are prevented from entering into UAE. Third, cessation of arms, proliferation, and financing, in addition to other relevant resolution in coordination with competent stakeholders. Executive Office is the technical focal point for following up on the UAE's obligations in Convention on the Prohibition of Development, Production, Storage, and Use of Chemical Weapons. So that's the responsibility of Executive Office. They are the focal point for following up on those obligations. And this reflects UAE government's vision of maintaining security and stability inside and outside the country, and promoting partnership with countries of region and the rest of the world to be free of weapons of mass destruction. Executive Office, like I mentioned, it's a focal point between Supervisory Authority. So Supervisory Authority, again, it's the authority who runs the examination on financial institution. Yeah, circulate the names of designated entities, individuals. They also ensure implementation and compliance of all the authorities to UN sanctions and UAE terrorist list in coordination with Supreme Council of National Security. They analyze private sector TFS reports and provide feedback in coordination with FIU and Supervisory Authority. Also, this is major point where it says that it increases awareness to the government and private sector in regards to TFS. So this is where, based on the first 4 points, they actually conduct the training sessions where the financial sectors are aware of what to follow and what could be the repercussion if we do not comply with these regulations. Like I mentioned, Supervisory Authority is part of UAE Central Bank itself, and ensure that the relevant licensed has sufficient understanding of their obligation in relation to TFS. And that's why they conduct such examination to the relevant sector. So these both are part of the central bank itself, but the activities are divided among both in this manner. So supervisory authority, second point, they conduct examination to the relevant sector and ensure compliance UAE decisions and regulations in the field of TFS. Ensure relevant FIs have proper control for implementation of TFS and monitor the implementation. I think we discussed this earlier as well. Fourth, this is another initiative that they have brought across the nation, and there were multiple virtual sessions held by central bank actually. National risk assessment. So there were risk assessment that was conducted across all the sectors. There were for banks, there were for insurance companies, there were for exchange houses, there were for virtual assets companies, virtual assets business. So there was a risk assessment performed on all of the sectors, and the findings were divided into inherent risk and residual risk. So in between is where the control effectiveness comes. This is also as per FATF recommendations, which they had issued. So as per the FATF recommendation also, we're supposed to have these controls in place in financial institutions. So the risk assessment must be performed on the yellow box, if you can see. This is the parameters on which risk assessment should be conducted based on clients, product and services, countries. Countries means the nationality of the customer, or where the customer could go, where the customer resides. Product and services would be central to the type of financial institution. Channels of distribution, sometimes it's brokers, sometimes it's any other intermediary. And in this case, financial institution has to take care that other intermediary also follow and is complied by the regulations. Because if they are not complied, it would be a question to the financial institution by the supervisory authority and rest others. All right. So the control effectiveness, I'm sure this is it looks basic, but definitely when it comes to implementing these points, it becomes a bigger project. Governance, policy procedures, we are really familiar with these actually. Policy procedures, KYC and due diligence, very important. Other risk assessments, yes. Management information, the ongoing reports and the reporting that goes to the regulator, also board of directors, senior management, regarding the risk assessment and how we have categorized the customers into high, medium, and low. Record keeping and retention, AML unit, yes, AML unit must be completely under a crucial audit, because there should be a periodical audit to understand the AML policy procedures, and it should be updated in terms of the product and services and clients and all the parameters that we have laid on the left side. SAR filling, which is suspicious activity report, if there are any suspicion and we do not report it, the AML law says that there are strict imprisonment or fines for the financial institution. Monitoring and controls, regular monitoring, like I mentioned before. Training, yes, and independent testing. So when we say independent testing, it's always the independent external audit that has to be involved with the national risk assessment always, because the risk assessment must be assessed by them. And the residual risk, strategic actions, tactical actions, and risk appetite. These are central to all the risk assessment, and we are left with it. So next comes the control assessment. This was issued by the central bank itself. Partially, so what makes, I have just taken the example of the banking, what makes banking being partially effective, and these are the risk factors, like I mentioned before, are included: business risk, customer risk, product and services and transaction risk, geographical risk, delivery channels risk, and terrorism financing and proliferation financing. So based on these, the control areas that require improvement. Business risk definitely will have that AML CFT effect. For example, business has to obtain all the CDD documents and make sure that all the documents, for example, all the documents and KYC documents are there. But then very recently, I mean, I would say that a couple of years ago, there was an understanding that, oh, okay, it's a business and compliance is always there, but commercials take over compliance always. But based on the recent updates and guidelines, it's very clear that there should be a clear balance between both. As a compliance person, I would always say that this clear balance is always required, because it's not that compliance is always important, and if there are no business, what do we comply with, and if business is only important, definitely we should have a compliance culture in the company, because it actually encourages us to do good business. I mean, in our personal life itself, we know whom do we deal with. We do a background check about everyone, whoever we come across. Then why not business? Why not corporate culture or corporate world? So we have to do that due diligence, encourage employees to do good business, to know whom we are dealing with, and then continue. So there is that balance always, and this is what business risk entails. Customer risk, definitely. For example, politically exposed person may own an entity. So finding the details of politically exposed person is very important, because that makes the entity higher risk, because it is politically exposed, and politically exposed person is in a position where he can actually handle the cash inflows in a different manner. That's why it is categorized under high risk. However, based on the recent controls that we can place in the financial institutions, it can be minimized. As I believe we are all risk professionals here, and we know that we cannot eliminate risk. We can never eliminate risk, but we can definitely try and minimize the risk, and that's what risk management is all about. Geographical risk, like I mentioned, if the customer is residing in a sanctioned country, that becomes a major concern. Delivery channels, again, I don't want to repeat myself, and then terrorism financing and proliferation financing. So policies, preventive and detective controls. So all the controls should be in a manner that it detects the risk or the AML-CFT risk in a manner that it is notified to the compliance team, to the extent that we are able to, it should be triggered to the compliance team, so that we are able to put the mitigative measures and mitigate the risk to find out the residual risk, right? So that's how it goes. So always there should be a trigger that goes to the compliance team, and this must be automated. Like I say, technological advancement is very important, because compliance should always work very closely with technology. As long as there would be changes, definitely regulatory compliance is all about changes. But then based on these changes, if we have to have technological advancement, and we have to be ready to introduce such technology into our financial system, so that we can achieve the regulatory compliance in terms of financial crime compliance as well. This is a format where we can see the inherent risk on the left, and based on the effectiveness, if the customer is categorized under medium, and based on the parameters, if it is medium, again, we find out that, oh, okay, the control paste is effective. But if it is based on this format is followed by most of the financial sectors in order to find out the control effectiveness, how effective our risk management or our risk framework for the financial institution is. And UAE and the Supervisory Authority, or I would say executive office, when they conduct this examination, they also check or measure the financial institutions control effectiveness in this manner, how effective it is and why. If it is largely effective, and why. And that's the format how they do the testing for the financial institutions. Yes, now I would also like to mention about the risk mitigation plan by the supervisory interventions. I've actually covered most of them, but I would also like to mention about the examination once again, because these examinations are conducted, I think, every year annually for all the institutions. Like I say, they come and they conduct an on-site examination. And if there are deficiencies and that deficiencies are not acknowledged or not addressed, there are strict fines. So next time when we come across such news on the news board that, okay, this exchange house has been fined and this institution has been fined, it's because of this. It's because of this, because they have been given a strict implementation plan prior, and then Supervisory Authority conducts the examination. There is a monitoring that goes on. So this is as part of monitoring. It is their mitigative measure. Definitely, as a country, they have to, as a regulator, they have to have their mitigative measures. And based on this examination is when the fines are heavily laid on the financial institution. Thematic reviews on emerging risk, they divide the sectors into different themes and try to perform national risk assessment on each, and then provides the mitigation strategies to separate financial sectors. It will be different. There is no general mitigation strategies that they have come up with, but definitely for different sectors is different. But when we drill down deep to the institutions, based on the risk appetite and the risk ability, institutions has to work with that. Institutions have to work with that. There are outreaches that they conduct. There are immense virtual outreaches that have been conducted in this year itself so far, and they try their level best for all the stakeholders to be well trained and well aware about what's happening in the market, and to be aware, to be abide by. Guidance in key areas, building on the sectoral risk assessment outcome, CBUAE identified key areas where the sector required guidance and clarity on regulatory expectations. CBUAE also issued guidance documents to strengthen the sector's understanding of the issue and to make the regulators' expectations transparent. They make sure that we know what they expect through tremendous documents they have been sharing. There are books that has been issued. So through these materials, it is well clear to the financial institution as to what's the next step that we all are supposed to take. Again, not just the financial institution, I would also say DM and FVPs. Sectoral risk assessment outreach. Again, this outreach is very important. The reason being, it's about the national, when I say national risk assessment also, like I said, it is different for different sectors, yeah? So you can see banking, exchange house, finance companies, insurance, and registered Hawala service providers, subsectors to convey the learning. So there were sessions conducted separately for different financial sectors to ensure that we are able to understand what is required out of us. So these are some of the key mitigative measures that Central Bank has taken so far in 2022. This is one of the main part where we say about penalties and fines. I would just like to highlight 2 points here. One is the financial institution who do not abide by or fail to perform, whether purposely or through gross negligence, their statutory obligation to report a suspicion of money laundering or the financing of terrorism or of illegal organization, the fines would be imprisonment and fine of no less than AED 100,000 and no more than AED 1 million. And secondly, if there are under any review is performed on any customer, for example, I would like to go specific to my role in this, because if there are any review that is performed on any customer or any transaction, be it anyone, if this information is told or is leaked to the outsider, then there is an imprisonment for no less than 6 months and a penalty of no less than AED 100,000 and no more than AED 5 million. So if this must not be notified to anyone, because it's a suspicious transaction report, there is a review being conducted on an individual or an entity because there is an AML concern, there is a suspicion concern, and Central Bank has been very particular about this since beginning, that if there are any concern and if there is a suspicious report or any blacklist concern has been raised, or you think there is a blacklist concern, do not let this leak out, or this information must be kept confidential, and it by no means it should reach to the customer at all. But in that case, we are giving a chance for the launderer or the person who is it wrong to actually fled away. So imprisonment for no less than 6 months and penalty of no less than AED 100,000 and no more than AED 5 million. So these two are the main fines and penalties when it comes to non-compliance. Here we come to the end of the session. I would like to leave my audience with the understanding and thought that so all the changes that we have been seeing, for example, when it comes to Etisalat, I'm sure we all use this a lot. So even they would mention something like, okay, you guys can go back to your home country. I mean, you can transact even when you guys are in your home country. You can make the payments and all of that. But even they have started mentioning that no, not in sanctioned country. If you are in a high risk jurisdiction, we would need to have an additional approval. So when you see these kind of changes across, nothing to worry to the extent that, oh no, UAE is in a gray list, world has come to an end. It's not that way. But I would like to, as a compliance officer, it's my responsibility to leave my audience with the understanding that we are working hard, and UAE is under gray list because there were some deficiencies, but UAE is trying the level best, and we all have to work together as financial market to reach to that end where we are able to bring UAE out of that increased monitoring stage, which will be very soon, because there have been a lot of recommendations, there have been a lot of guidelines that has been issued. And on the left side, if you say, I have taken this from the central bank notice, that from a legislative and regulatory perspective, UAE also advanced its AML CFT efforts through the registration of beneficial ownership, which I had mentioned earlier, information in a unified database that will serve as a reference for stakeholders that include security agencies, police, and other enforcement bodies as they investigate financial crime. Through these reforms, the UAE received upgrades on 3 financial action task force recommendations by the Middle East and MENA FATF in June. So these upgrades brings the UAE to a strong level of compliance for 37 of 40 FATF recommendations. So there are 40 recommendations issued by FATF for generally for all jurisdictions, not only for UAE, but UAE has reached 37. So we are doing a good job in terms of that. And also, when it comes to the economic register, the establishment of set of harmonized beneficial ownership regulations, like I mentioned, that was a major challenge that UAE has been facing so far. But even in that terms, we have reached to the level that we have reached 37 of 40 FATF recommendation. And this is where UAE stands now, with TFS, with the committee that has been formed, with the advanced screening, advanced technologies. In terms of technologies, UAE has developed a lot so far. So with all this, I come to the end of our session today, and I would like to open the platform for any questions if any of you wish to give, or else we can wind up. I would like to also take this time to thank Mr. Saurabh for constantly helping us, motivating us to move forward, and my fellow colleagues, Ms. Elsa, Mr. Alex, Mr. Tamer, Mr. Omar, for the support and for the kind of work that we are doing for IRM in UAE region. And I would like to give up some time for the questions, if any. Otherwise, we will wind up.
Thank you, Sanya. So it was a very informative session. Thanks a lot.
Thank you, Zoe. Means a lot. Thank you.